What's up, guys? We're going to be talking about Coinbase. It's pulled back pretty aggressively today, actually dropped from highs of 270 3 weeks ago to lows today of $163. And last week, we saw some unusual alpha gold flow come through. Of course, big money is not always right. In this case, they did take a short term butt whooping because the stock was down pretty big, but they averaged down again today. Now, if you guys want to learn everything that has to do with learning how to read flow, we have a completely free course down in the description that will teach you guys options flow mastery. This way you can get a much better idea of what we're talking about if some of this seems foreign, and it is a class that is only 60 minutes long. So you will learn everything that you need to know about reading unusual options in that course. Best part is free, and we're not going to blow you up with a ton of emails either. We're not those people. So looking at Coinbase, you're going to notice that this is the main flow that triggered the alpha gold alert. As I've said before, big money's not always right. Hedge funds are wrong all the time. The 95% of traders that fail is not just retail traders like us, it's also hedge funds. We've seen this happen many times before. Now, in the case of the flow today for coin, you're going to see that the big one that hit was for this one, the large bullish flow, expiring in January 16th, 2026. So this is not 6 months from now. This is 6 months from now and then a year after that. So we're looking at about 18 months for this contract. This instantly is going to mean that at this point, this is not somebody who's looking to day trade this because their expiration is out for a very long time. The other thing to notice is that it has the second thing that we want to see, which is urgency. The A at the end of all of the detail here means ask, and AA means above the ask. This means that the person paid more than what the highest person was selling for in order to get into this position. You can also notice that this is a lot of money we're talking about on the options market. This is over $10 million easy. So it has size, it has time, and it has urgency. Those are the three golden things that we look for and that I teach within the options course, as I said before. Going through the technicals here, the first thing to notice is that we did break this market bias. So when we break the market bias, that's never really a good sign. You can see that if every single time we pulled back to this indicator, you accumulated, you would have made bank over the long run. I also teach this indicator in our courses, which is down in the description. It's called the market bias. And so every time we pull back to that market bias, that's usually when we're in an uptrend. You can see that most of the times when we're trading underneath the market bias, we are massively selling off. And then, of course, when the trend shifts, we start to trade back over it. So I am not inherently a fan that we're trading underneath the weekly market bias. That is not a good sign. But if you understand market structure, and I've been doing this for 9 years, then we know that if we look at most recent lows and most recent highs, which our most recent low is not down here at 69, it is actually here at about 123. And if we take our most recent high, you're going to see that that is sitting up at 270. Well, if we go ahead and isolate this with the Fibonacci retracement tool, you're going to notice that the area that we normally bounce in is called the golden pocket. This area sits between the 0.618 and the 0.786. In most cases, when we're in an uptrend, price will pull its way back into this area, and this is the area in which if we're going to see Wall Street step in to save, they're going to step in this level. And what's funny is it's not just with this stock. Like if we look at QQQ, they stepped into the golden pocket today. NVIDIA, once again, I don't have this drawn up, stepping in to the golden pocket. Looking at Tesla, pulling back into the golden pocket. And this type of movement within the market happens each and every single day, each and every single year, and is a very reliable way, in my opinion, to focus on trading. So at this point, I don't think it's ideal to go long just yet. I don't think that buying directional options is the move right now. What I'm expecting to happen is I think that we're most likely going to see price bounce in the next couple of days back up to $230, which would be about a 20% move. If that actually occurs, which I'm not playing this, I don't have enough conviction to say I think that that's going to happen enough. But if that bounce does occur, I think that if they don't take their profits, which I'm going to spend a lot of my time scanning to see if they're taking profits. If they don't take profits, I think we could potentially see another pullback in the next couple of weeks down to 150. So what I'm going to be doing is looking to accumulate back within that range if we're down around 156, 160. I hope this video helps, guys. Thanks for all the support. Let me know any tickers that you want me to cover down below. I know that a lot of people trade many different things. And I want to show you guys strategies that we use on so many different tickers and even different assets, because the same exact technical analysis that we use can be used on crypto, Forex, whatever it is. Thank you guys for all the support. I'll see you next time.